Welcome to the Techno Fundamental Report for February the 6th. I thought this was an interesting illustration showing how certain consumption items or items, what the prices have done since January of 2000 till June of 2022. Hospital services, college textbooks, so forth. But, the price of televisions have dropped dramatically. So this is all having to do with overall inflation. It's very deceptive. You really never really know where it's coming from. William McKinley, President Trump has been speaking pretty extensively about tariffs. And what he argues is that during the period of William McKinley, where he used tariffs aggressively, in fact, he passed the Tariffs Act of 1890, which was, where you had tariffs of up to 50% on all kinds of items. The reality of the situation is that we really went into a very prosperous period in the late 1800s, early 1900s. Now, McKinley was assassinated in 1904, and he appears to be a very definite believer in tax reform. We really need tax reform. This is a book that's on McKinley. I've just started reading it because I'm interested in the subject. I think that the idea of using tariffs, and I'm really having to use my imagination a little bit here, but I wonder if, President Trump's plan isn't to try to replace the Internal Revenue Service with what he calls the External Revenue Service, where we start deriving revenue to the country via tariffs and value-added taxes. I think it'd be a great idea, get away from the income tax. It just doesn't seem to be a very efficient way to collect revenue. Now let's talk about the market. What the problem we have right now is that we are in a sideways, no trending market right now. That's usually due, to uncertainty. The buyers and the sellers just can't seem to dominate. And so if we look at where we are now, this is the NASDAQ now. As you can see, we've been pretty much locked in a trading range. Now this really calls for a lot of patience, but also it really calls for trying to find those individual securities that are going to outperform. And that's hard to do, but they're out there. Now here's the S&P, same story. We're just moving sideways here. Now on the equally weighted S&P, it's had a little bit more of a difficult time here. The average stock just has not been really outperforming. For the last 2 years, it's been pretty much 7 stocks that have driven the indexes, especially the market cap weighted indexes. So hopefully that's going to change. I do think it is starting to change. It does look like the market is broadening out. Now, interest rates look like they're starting to improve here a little bit. We're getting a rollover here of the yield on the 5-year Treasury. You can see what happened to the power index. We got all the way up to a reading of 20, and now it's pulling back. So hopefully we're seeing a normalization of interest rates and get them to stabilize. And the good news is the primary trend of the S&P and the NASDAQ continue to be up. This is a bull market. It's just that we're going through, I believe, a transition due to the election. Now, remember, when Reagan came in 1980, the market really didn't take off until 1982. It was like a 2-year adjustment period. Now, the new lows on the New York Stock Exchange did kind of pick up here a little bit. Hopefully that starts to stabilize, but we saw that one day, the last 2 weeks have been pretty difficult. So you can see that the number of new lows have gone up, but not terribly. Price of gold hitting all-time new highs. Last year you have to realize that gold and Bitcoin were 2 of the best performing things. I don't know if I want to call them assets because they're non-producing assets. But anyway, gold is really starting to shine. Now on the IPO market, we want to really, the main goal here, I believe, for the Trump administration is going to be encouraging businesses to the point where we start getting a lot of initial public offerings and getting good performance out of them. So you can kind of see here with this IPO fund, we're kind of trying to form a bottom here, and hopefully we're going to break out. We need to see a healthy IPO market. Semiconductors continuing to struggle. You can see here with the SMH that we got that big drop 2 weeks ago. Pretty much tried to rally, somewhat failing, it's kind of stuck. So I would kind of keep an eye on the semiconductors. I wouldn't be real aggressive in that field at this point. It's very cyclical. So let's look at some stocks that are in uptrends. You know, I did say that the market's moving sideways. So here's a company called Reddit. Mainly social media. Hit an all-time new high yesterday. Is in a very strong uptrend. You know, I was looking at the numbers on this company. They're quite amazing. They've got $2 billion in cash. Well, $1.8 billion in cash. And they have very little debt, hardly any debt at all. And so it's a pretty solid looking situation. Here we have DoorDash, which is a company that is involved in like Uber Eats and so forth. They deliver food, groceries, all kinds of things. It's actually doing quite well. Hit a new high yesterday. Nice uptrend. So I would keep an eye on DoorDash. Now, in conclusion, I just wanted to say that I'm tired of this debt clock. Now, this debt clock, this picture's outdated. It says 31 trillion. I think I saw it the other day up to 41 trillion. This is ridiculous. We have got to get this debt under control, and that's what we're all hoping for. So let me know if you have any questions. Thank you very much.